The Teranet-National Bank House Price Index was released today. It showed prices edged up by 0.5% in March compared to the month earlier. That is the first increase in 10 months. Joining us now to look into the numbers is Stéfane Marion, chief economist and strategist with National Bank of Canada. Thanks so much for joining us today.
Hi, Jacqueline.
So give us a sense of what's happening out there, because even when you look at the numbers, it really depends which number you look at. I mean, the month-over-month number seeing a little bit of a tick up there. Year-over-year, a record decline for prices.
Yeah, and Jacqueline, if you seasonally adjust for the month of March, it was not a big increase. It was actually, again, a slight decline. So I think the overall picture of continuing price deflation is still at play in Canada. However, the deflation is abating. And I think that's good news because we're also seeing home resales that are stabilizing also. So I think that much of the price decline is behind us. There's still a little bit more to come, but I think, we're moving in the right direction, particularly if interest rates stabilize.
Do you think that prices end up, weakening to levels that we saw before the surge of the pandemic, or are we going to normalize at a level that's a bit higher than that?
That's a good question. Prices were up almost 40% during the pandemic.
Right.
We're expecting prices to drop from that very high level, which was unsustainable, to maybe 15%. So basically, Jacqueline, what we'll do is that we'll go back to prices probably where they were early 2021, but I doubt very much that we'll go all the way back to prior to the pandemic. So people that bought homes in 2020 will still be in the money. A little bit more difficult for people in 2021 and 2022.
Stéfane, we've got a graph of yours showing prices in Canada versus the U.S., and I wonder if we can just bring that up, because it is interesting to see that house prices in Canada, when you're looking at the start line there of being 2019, they didn't rise as much as they did in the U.S., and I found that a bit surprising.
Well, they were up very strongly, Jacqueline, but my point on this chart is just to show it's not just Canada that was up, and actually they were increased even more in the U.S. And I think that surprises some people. And you can see that home price deflation is observed in Canada. Prices are declining both in Canada and the U.S. So things are starting to normalize. But Jacqueline, the thing that U.S. doesn't have that we have is much better demographics, so that will limit your downside on home prices.
Interesting. And also those really long mortgage terms in the U.S. is so much easier to get a mortgage that you're locked into maybe for as long as it takes to pay off that mortgage.
So you're right. The payment shock will be more important in Canada. Hence the reason why the Bank of Canada can no longer follow the Fed in terms of rate hikes, because the payment shock will be observed in the second half of this year. Now, that is a partial concern. It will limit, again, the upside on home prices. It probably argues for more downside. But the downside, yes, is impacted by rates. Hopefully the Bank of Canada is done tightening, and I think they are. And then we get the support from the best year ever for population growth for the working age population. Jacqueline, in the first quarter of this year, working age population in Canada was up 200,000 individuals. We've never seen this before. So that is a support to the housing sector.
We've got one of your graphs showing that too, the spike in population in comparison to housing starts. So the supply side of things, paint the picture for us there. I mean, the graph does, but tell us a little bit more.
Well, Jacqueline, just to give you a sense of how supply is not keeping up with demand right now, or population growth, historically, what you do is you get the ratio of home starts to population growth should be at 0.6, right? There's more than one person per household, so it's not a one-for-one relationship. What we're seeing right now is that population is so strong that, housing supply, the ratio is at only half of what it should be. So just to keep up with population right now, we should be looking at 120,000 home starts per quarter, but we're on the run rate maybe of 57,000. So clearly what that means, Jacqueline, is with the strong demand for household formation, supply is not keeping up. That limits my downside to home prices down the road because there's such a strong demand for household formation at this point in the country.
And Stéfane, I mean, that's really interesting. When you think about population growth in this country, too, it tends to happen in the urban centers the most. In Toronto, for instance, it tends to be a magnet. But the housing market over the past 2 years, the heat in it spread across the country. How are you seeing that change at this point? Because, you know, we have seen a lot of companies change their thinking about remote work, which seemed to be one of the things that sparked a flood of people to other areas that they might not have explored otherwise. Are you seeing that reverse?
I think part of that is there to stay, Jacqueline, but I think there's a willingness also from employers to bring more people back to work. So the way I see it is that as you maybe unwind the work from home phenomena, and you're not going to totally unwind it, by the way, but partially unwind, we get this huge population influx that's coming, you know, towards large metropolitan areas, and as affordability is, you know, there's such expensive markets, so that I would think that it will support, you know, those other markets that have come under pressure recently because the suburbs saw this phenomenal increase, 80% increase in home prices, not just suburbs, but, you know, more rural areas. And I think that's unwinding. Some of these prices are down 20% right now. Again, I think the same message is there, Jacqueline. We will unwind prices, but I don't think we're going back to the 2019 price levels. So I think we'll stabilize, you know, maybe another, I think we're 2/3 of the way for home price deflation, and it should stabilize in the second half this year as we see the impact of this job creation and population growth.